Weekly U.S. Market Update Week ending August 16, 2025. Major indices closed the week on a positive note, led by expectations of a possible Federal Reserve interest rate cut in September. The Dow Jones Industrial Average was up 1.7%, the S&P 500 rose 0.9%, and the Nasdaq advanced 0.8% over the past week. All three indexes have logged several consecutive weeks of gains, and the S&P 500 as well as the Nasdaq hit new record highs earlier in the week before ending slightly off those peaks. CNN2. Small cap stocks outperformed large caps, with the Russell 2000 notching its strongest weekly margin over the S&P 500 since April, trout price earnings season. Most major companies have reported second quarter results, with robust earnings from the technology and communications sectors driving the indices upward. Notably, 69% of S&P 500 companies beat revenue estimates and 81% exceeded profit forecasts. Schwab Inflation and Economic Data. July's Consumer Price Index (CPI) showed inflation rising as predicted, which reassured investors and paved the way for rate cut anticipation. However, the Producer Price Index (PPI) for July jumped 0.9%, much higher than expected, tempering some rate cut optimism and causing a market pullback in the latter part of the week. Finance. Yahoo to market sentiment. Investor sentiment is still constructive, but not exuberant. Valuations on large-cap growth stocks remain high, heavily skewed by a handful of mega-cap companies, especially in tech. Small-cap stocks, in contrast, are seen as attractively valued, but have trailed the big players. Morningstar. Tariff and policy headlines. The market continues to weigh President Donald Trump's announced and proposed new tariffs on semiconductors and steel, alongside ongoing trade negotiations with China. Tariff-related categories showed mixed inflation readings this week. Economicdom's +2 outlook and next week's August 18th to 22nd. Predictions Federal Reserve and rate cut hopes. The main catalyst for next week is the ongoing speculation over a potential Fed interest rate cut in September. Dovish signals or weaker economic data could strengthen this view and support equity prices, but another surprise jump in inflation could weigh directly on stocks. Schwab +1 key events. Watch for housing data, leading economic indicators, and, importantly, the Federal Reserve's Jackson Hole Economic Policy Symposium later in the week, an event often associated with policy hints or surprises. Getter-Jones corporate earnings and sector leadership. With most earnings reports behind us, attention may turn to guidance for the back half of the year. Technology and communications sectors remain dominant, but small caps are starting to draw renewed interest from value-oriented investors. Morningstar +1 risks. Persistently high inflation, renewed tariff escalation, or policy missteps could trigger volatility. The market is trading at historically high valuations near a PE of 34, the S&P 500. Conditions reminiscent of prior overvalued periods, easing the stakes for any negative surprises. Fortune +1 bottom line short-term momentum is positive, but vulnerable to inflation surprises, policy changes, or global risk shocks. Expect continued volatility surrounding Fed policy expectations and tariff news. Long-term investors should remain aware of high valuations in large-cap tech, but may find opportunities in undervalued small-cap stocks. Monitoring the Jackson Hole Symposium and upcoming economic reports will be key for short-term direction. Edward Jones +2 main predictions for U.S. markets next week based on current trends, expert commentary, and recent data. Here are the top predictions for the U.S. stock market for the week of August 18, 2025. 1. Slightly bullish trend, with possible consolidation. Technical and sentiment indicators suggest a slightly bullish outlook, but a period of market consolidation or sideways movement is also likely. Major indices, S&P 500, Nasdaq, Dow, are near all-time highs. The market remains supported by strong earnings from technology and communications, but participation is narrow. 24% of S&P 500 stocks are outperforming the index, so mega-cap stocks are doing most of the heavy lifting. If breadth doesn't improve, concern could rise, but for now, resilience is evident. Schwab +1-2. Fed policy and rate cut speculation drive short-term moves. The biggest driver will continue to be speculation on Federal Reserve interest rate policy. With July's mixed inflation data, soft CPI, but hot PPI, markets expect a potential rate cut at the Federal Reserve's September meeting. This fuels optimism, especially in rate-sensitive sectors like financials and real estate. But another surge in inflation could quickly reverse sentiment. Trout price plus 1.3. Small caps and value stocks may gain ground. Last week saw outperformance by small cap and value stocks. If expectations for Fed easing strengthen, market leadership could broaden beyond mega-cap tech names. Rate-sensitive and cyclical sectors such as consumer discretionary, financials, and select mid-caps may offer upside opportunity. Edward Jones plus 1.4. Tariffs and trade policy risks remain. Uncertainty around U.S. tariff policy, especially on semiconductors and steel, continues. While trade headlines were not the main market mover last week, any escalation or surprise announcements could trigger volatility and hurt profit margins for companies exposed to affected goods. SEC plus 2.5. Macro data and the Jackson Hole Symposium. The week will feature key macroeconomic releases, housing data, leading indicators, and the Jackson Hole Fed Symposium, August 22nd, a frequent source of policy news. Surprises or signals from Fed Chair Powell could cause outsized market moves in either direction. Trout price plus 1.6. Risks. High valuations and inflation surprises. The market is trading at high valuation multiples, S&P 500 near 30 times earnings, making it more susceptible to negative surprises, especially in inflation, Fed policy, or geopolitics. High input prices in some sectors and sticky services inflation remain risks for earnings growth. It's 4+ to summary table. Key market forces for next week: factor outlook, prediction, comment, market momentum, slightly bullish near highs. But possible consolidation breadth, narrow mega caps lead, stock pickers, market Fed policy, rate cut expectations supportive key driver. Risk if inflation rises, earnings season positive, but ending tech come leaders. A lag. In other sectors, tariffs, trade overhang, risk any escalation may trigger volatility. Upcoming events, Jackson Hole closely watched for Fed signals, valuations high. Increases sensitivity to bad news. Bottom line. Expect generally positive but cautious trading next week, with possible consolidation as investors await fresh economic data and signals from the Federal Reserve. Watch for volatility around policy news, especially at the Jackson Hole Symposium. International Schwab plus 3. The U.S. market is quite likely to enter a period of consolidation after recent gains. This is a widely shared view among analysts and technical strategists reviewing current data. Many experts lean toward near-term consolidation. Markets have surged to new all-time highs largely on the back of a narrow group of mega-cap tech stocks, while the broader participation has lagged. Only about 24% of S&P 500 stocks are outperforming the index, suggesting that much of the index's rally is being driven by a select few rather than broad market strength. This top-heavy structure typically raises the odds that the index will pause or move sideways to digest gains. Ameriprise plus 1. Technical and seasonal trends support the case for a pause. The S&P 500 and Nasdaq are consolidating gains made over the past quarter. Periods after strong rallies often see sideways or range-bound trading as investors adjust positions and wait for clearer economic or earnings signals. Seasonally, August and September are, on average, the weakest months for stocks. Adding to the case for near-term consolidation, global Morningstar plus 1. Market breadth and divergence indicators point to a healthy pause, rather than a bearish reversal. This means the consolidation is seen as a normal, even healthy part of the bull cycle, allowing support levels to be established ahead of the next major move. Schwab plus 2. Ongoing macro and policy uncertainties, including tariff implementation, upcoming Fed policy decisions, and inflation trends, are also prompting investors to consolidate positions, contributing to choppy or sideways action rather than continued strong rallies. Ameriprise volatility remains low, but investor complacency is noted, suggesting the potential for short-term swings. Even so, most strategists emphasize that stable economic fundamentals and solid earnings are under the market. So any pause is not expected to result in a deep correction, barring new negative surprises. Schwab plus 2. In summary, after recent strong gains, A market consolidation is both likely and considered healthy by most analysts. This period may feature sideways movement, brief pullbacks, and stock-picking opportunities, but the overall uptrend remains intact as long as the economic background holds up and key risks stand to escalate. Investing.